Understanding chaotic markets with the Fibonacci Spiral. In this video, we're going to explore one of the most unique and powerful analytical tools in technical analysis, the Fibonacci Spiral. Unlike most tools that focus only on price, the spiral integrates price, time, and range into one dynamic structure. It helps us understand not just where the market is, but how the underlying system is evolving. First, let's talk about the logic behind it. The spiral is built on a simple idea, that beneath the apparent randomness of market movement, there is a deeper mathematical order. This order is tied to the natural growth ratios found in the Fibonacci sequence, and especially the golden ratio, 1.618. The entire spiral is anchored to one significant pivot point, either a major high or a major low. This point acts as the initial condition of the system. And according to chaos theory, even the smallest change to this anchor can completely alter the entire future path of the curves. This is the essence of the butterfly effect. Next, we look at the arcs themselves. These arcs are not fixed support or resistance levels. Instead, they function as dynamic attractors. The market tends to gravitate toward them or react strongly when interacting with them. When price moves above a curve, that curve becomes a developing support. When price moves below it, it becomes developing resistance. This means the structure evolves over time. Support and resistance are no longer static. They grow, shift, and adapt as the market progresses. Now let's apply this to the chart. The recent upward movement from the anchor low has brought price into a highly sensitive zone. It's now interacting with multiple dynamic arcs while also moving into horizontal resistance created by previous price memory. This creates what we call an energetic inflection point, a moment where the system builds pressure and is forced to make a directional decision. If price breaks above the arcs and holds, it confirms that a new growth trajectory is forming. The initial low becomes a strong enough driving force to overcome previous structural barriers. But if price gets rejected, it means the prior limitations of the system are still dominant. The arcs are acting as resistance, and the market may pull back to test its nearest developing supports. To wrap up, the Fibonacci spiral is a powerful way to understand markets as living systems. It doesn't just show where price is, it highlights the hidden structure behind the movement. It helps us identify the moments in time and range where volatility, pressure, and structural change are most likely to appear. By learning to read these dynamic patterns, we move beyond traditional analysis and begin to recognize the subtle order that exists within the chaos of the market.